The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. If you need to reach me, you can call me at 631-647-4694 or visit me on my website, mainstreetplanninggroup.com. At Main Street Planning Group, our code is choice, organization, direction, and education. We work with hundreds of advisors across the United States, helping them with their insurance plans, mostly life insurance, disability, long-term care, and fixed annuities. We are experts in these areas. Today's show, I really want to focus on, we talk a lot about generalities. Today I want to be about specifics, specific products that you may own, specific companies, specific situations that you need to deal with in order for everything to work out fine. So the first thing I want to talk about is a company that was at one time the largest insurance company and oldest insurance company in existence was MetLife. You may not know this, but MetLife no longer issues life insurance new policies. They still do group policies, but they're no longer in the individual life insurance or individual long-term care market or individual disability market, off the shelf completely. What does that mean to you? Well, that doesn't mean they're not going to pay your claim necessarily, or if you have a death, that they wouldn't pay the death benefit. But what it means is if you bought a MetLife policy, if you bought a MetLife term policy, for instance, maybe 5 years ago, you can no longer convert it to their better products that they had because they're not issuing any new products. So they do have a product you can convert to. It is the most expensive, and it's actually a rated product, so that if you're healthy today and you're relying on that term, and let's talk about term insurance. And I've mentioned this before. It's not just about price when you buy term insurance. As I say, you never buy online and this and that. Because eventually, I'm a very big believer, term is just a temporary holding spot for your insurance. Only 1 or 2% of all term policies ever actually pay a death claim. People don't believe me when I tell them that. But it's the truth. Only 1 to 2% pay a claim. And the reason is 95% of the people either outgrow their term, their term expires, they didn't need the insurance. The other 5% have changed it over time for whatever reason, or dropped it, or lapsed it. Let it go, I don't need the insurance anymore. That's an astounding number. So if you buy term, and I'm not saying term is bad. I mean, if you have young kids and you're going to college and you need to save that money and you need to buy a lot of insurance for a little bit of money and just to cover you over that 20 years or 15 years or 20, it's a wonderful product. However, you want the availability to convert that term into something permanent down the road in case you still want the insurance. So the problem with MetLife is, now that they're no longer issuing new policies, They know you can no longer to convert to all these wonderful policies that they had. They only have the most expensive dividend pay. It's a whole life policy, but it's the most expensive policy, not truly rated to how you were when you took out the policy. A good conversion allows you to convert. If I'm best class, meaning if today I have no health issues, I'm young, I'm healthy, the advantage of having a term policy that has a conversion privilege is whatever my health is today, and if I can convert it 10 years from now into something permanent, it goes back to how my health is today. It's still related to the age I am when I convert it, but I preserve that right to have the best class, let's say, when I'm, 10, 20 years in the future. I'm now 63, so that doesn't really apply as much, but for you younger folks buying term insurance or you're starting out a family, that's a big deal. So when all these millions of MetLife policies were sold 5 years ago, 6 years ago, 7 years ago, 8 years ago, 9 years ago, with the intent on this is a great company, it's got great products to convert to, they're not there anymore. So if you're sitting with MetLife and you're thinking this is my end-all answer, you need to call me. Okay, you need to get a different company if that's what your intent is. You need to do it now. Call me at 631-647-4694. You need to call me. It's that important that you don't have that. You need to have these things reviewed. Also, let's say you have a permanent MetLife policy, and they had some very good ones. They had a good universal life. They had nice whole life policy. They have long-term care disability policies. All good policies. Their whole life policies, the dividends are very low. Now, when you took out these policies, and there's many companies, many of the top whole life companies out there, if you've had these policies for 10 years or more, Northwestern, New York Life, Mass Mutual, the dividends that they were paying then are not the same now. So if you were counting on big cash growth at 8-9%, we've hit the lowest interest rate market in the world. They're no longer paying that. And if you've taken loans out of your policy, which is not a bad thing to do, it's a great tool to use, and you never paid them back, and those loans keep growing and growing and growing, you could have a major problem. You need to call us if you have loans on your policies. Because what happens is those loans grow, and then you may not want to pay that loan back. And if you don't pay that loan back and you let that policy say, I had a client this week, very well-to-do client, who had a lot of old whole life policies, and he says, you know what? I have loans on them. I got this. I am just going to let them go. What he didn't realize until he spoke to me is that if he let them go, he would have to pay a tax on any of the unearned dividends that he got after having these policies for 20 and 30 years. So he may have a tax bill of regular income of $500,000 if he just let these policies go. You don't just lose the death benefit. All that tax deferral all of a sudden comes back to haunt you, particularly on whole life. So people have taken out loans, and they've also, when these whole life policies were issued, were paying very high dividends, and over the years the dividends have gone down because the interest rates and the profitability of these companies has gone down. So it's reflective in these insurance policies. And the problem with most people that I know, most people, is they buy life insurance, they put it in their drawer, and they forget about it. Even people who are planning and diligent and very successful people that I know have multiple policies. They don't even know what they have until we look at them, and then we realize there's some issues. So again, if you have Met, and I just don't want to pick on Met, there's several other companies that if you bought term at the time that you need to look at. Not only is there a conversion problem, but you call up MetLife right now, or I'm going to give you some other names too, and I'm picking on Met because they were the biggest and the baddest at one time, and Snoopy and all that stuff. But you pick up and call the phone, and you may get somebody in the Philippines or somewhere outside the United States who you're going to ask questions about your policy. You're going to try and make a change to your policy. You're going to try and change the beneficiary, and you're going to try and do it yourself. You just go ahead and call that 800 number and try it. And you find you're going to be very frustrated that you can't get a hold of somebody to help you. And this is important. This is your insurance policy. This is important. I need service on these policies. That's why you need to reach out to us. We do a lot of service work for people because these insurance companies have taken their policies while they still have to pay the claims, but they get rid of service people. They take it off out of the country. Very difficult to handle. You're listening to the Main Street Code for Financial Success, and we're going to be back right after the commercial. Thank you. Welcome back to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein, and I can be reached at 631-647-4694. Prior to the break, I felt like I was kind of picking on one company, MetLife. I didn't mean to pick on them, but they're no longer issuing new policies. And here's the problem is, if you bought term insurance with the intent of having it for the rest of your life, you need to get out of that and look at a different term insurance. If you're healthy, you need to replace that with something that you know you can convert later. There's other companies there as well, and it's a very difficult time. Insurance companies have changed a great deal. There was another company called ReliaStar, which changed its name to ING, which then changed its name to Voya, which is now also no longer issuing new policies. Why is that important? Again, if I bought their term and they had a very inexpensive term policy, and it was the best price at one point in time, and that's great, and you have it in your drawer, and you're intending to convert it, well, there's very little to convert to. And again, you're going to have that same problem that I talked about with MetLife with service. Call somebody. You know, they do have a service center in Minot, North Dakota, but a lot of their servicing is done off-seas, and, you know, when you need to make a policy change, when you need that policy to pay a claim, when you have a disability, when you have an issue, you want to have somebody to talk to. Which brings me to a whole nother point. There's all these places online, on TV, buy 1-800-TERM, do this, do that. You want to buy insurance from somebody you know, who somebody can help you with these contracts. Not just obtaining the coverage and obtaining the right coverage that's right for you, which is so important, which they don't do. They only sell on price. But having the features and the benefits that are going to benefit you, whether it be disability or long-term care or attached to the life policy or convertibility that I keep talking about, you need something that's going to work for you, but also if you have a problem, if you have another child, if you have a new beneficiary, if you get divorced, if a million things happen in life, a million bumps in the road, or you need to, God forbid, your loved one dies or you become disabled. I mean, who's going to do all that work for you? You need a person to help you, guide you through the process, guide you through these insurance companies. That's what I do. I do this for agents as well as clients. I don't charge a fee for this. This is part of my service. As a matter of fact, I don't charge a fee when you buy a policy through me. I'm not charging you a fee. I'm getting compensated from the insurance company in the form of commission. It does not come out of your pocket whatsoever. So it doesn't hurt to call me and look at your policies. So we talked about MetLife. We talked about ING/Voya ReliaStar. Okay? We talked about whole life policies. Northwestern, Mass Mutual, New York Life. I see a lot of these policies with loans on them. Or They were paying very high dividends in the past, and now the dividends are 4% when they were 9%. Big difference to your cash value. Some of them have loans on them. Those loans can get out of hand. They need to be rescued. We have strategies to help you with that. And it's very important that you address it and not let those things lapse. And you address these loans so they don't get out of hand, because I see it every day. There's another company that was very big in New York at one time, and it's changed its name about 12 times. And it could have been Aviva. It could have been Commercial Union. Now it's Athene and First America have taken over these policies. They don't even have a New York domiciled insurance company to service your policies, and they were in a big class action lawsuit. If you bought term from any of these policies, any of these companies I've mentioned, so far it's Met, ING, Aviva, CGU, any of these companies, you're not in a good place because you can't convert. Those you can't even convert in the state of New York. It's a problem. You need to call 631-647-4694. Let me look at your stuff. Let me go through your insurance policies with a fine-tooth comb to make sure you have what you want. And you need somebody to service these policies. Not just somebody that sells you a policy and you never hear from again. That's the problem with buying online. Okay? You may think you save $1, you end up costing yourself millions. Save $1, cost yourself millions. Makes no sense. So just because you hear an ad on TV, cheap this, cheap that, it's not what you want. You want to get stuff that's going to work for you. It's very important. So these are some of the issues we have today. We also have another company that just left New York last year with New York product, and that's Lincoln. Another great company. I do a lot of work with Lincoln, but they no longer have product in the state of New York. What happens to the term policy I bought with Lincoln? Well, I don't know yet, actually. I have to ask the company, but they don't have any new product in New York. They have nothing to convert to in New York. This is a big problem. Lincoln also announced last week or 2 weeks ago that they are taking their MoneyGuard product out of the state of New York. MoneyGuard is an asset-based long-term care product, which will no longer be about a great product, but they do not want to do business in the state of New York anymore because of regulations, and their product is different in New York than the other states, so they pulled the product off the shelf. That doesn't mean they're not going to service that product. I'm not looking to replace that product, but you do have a month to buy it. But what it does mean is you need to secure your future and your products and get everything squared away, because products are changing very quickly, especially in the state of New York. There's insurance companies that have left the state of New York. Mutual of Omaha left the state of New York, not for long-term care, but for their life products. They do have a conversion product, but you need to call us and have this looked at. Now, while I have time, a couple of other issues came up this week that come up all the time with me. And it comes up with people looking at their policies. As a matter of fact, I was on the phone this morning with a money manager, and he showed me a whole list of policies that one of his clients has. And one of the issues that came up, and what differentiates what I do from other people is the breadth of knowledge I have in these policies, is I see that these people had set up a family trust to hold their policies in the past. Now, when we bring on the estate attorneys and we talk to them, we're going to talk about there's different kinds of trust. So an irrevocable life insurance trust will ensure that your life insurance policy goes to your heirs estate and federal income tax free. But left in a family trust or just a regular trust, it's still part of your estate because there's incidents of ownership. It's not an irrevocable trust. It could be a revocable trust, which doesn't act the same way, because the IRS will look at it and say, well, you have incidents of ownership, so you own it. So that's part of your estate. So you could actually aggravate your estate by having these policies. In other words, let's say you're right at that threshold of what your estate is worth. And then you have these life insurance death benefits of several $1,000,000. That's added on to everything else you have, including your business, your home, your cars, your cash, your investment accounts. All gets added in to where you may have an estate tax issue where they could take up to 40-50% of your estate. So titling of your life insurance policies is very important. Now, they may have done great planning over time, but things change. Not just beneficiaries, ownership. So it may have been okay one time, but it's not now. Then I see people with irrevocable life insurance with term policies in there that don't belong in these trusts. So if you have a bunch of policies or anything else, call us at 631-647-4694. We are experts in the area of insurance. You're listening to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein, and I hope to hear from you soon. If you have any questions whatsoever, feel free to call me. Go to my website, mainstreetplanninggroup.com. I've got videos. I've got all kinds of stuff to educate you, and we're here to help. And we like helping people. That's why we love this business. So thanks again. Have a great day. Hopefully we'll have some good weather soon. The ice is melting, and life is good. Thanks again.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.